of Global Research. Joyce, good to have you here.
Great to be here in person.
Yeah, it's a treat. So you think there's some unfinished business here in terms of potential testing and downside into next year for the market?
Yeah, the one thing I would just say is that we're headed for a year that's not going to be linear. So, I mean, look, we're not in a global recession or a U.S. recession imminently, but there's still more work to be done. We still need to see services inflation come down, and the labor market conditions are very tight right now. And we've had some pretty rapid market moves here. So I just would not be surprised if you see us testing the lows that we had this year sometime in the first half of 2023.
Okay, and so for context, that's a 10-ish or a little more than that % drop from here would be in the S&P 500. What does that mean in terms of positioning either here, globally, between asset classes, things like that?
Well, look, I think one other theme that we're looking at, there's non-linearity, but there's also more convergence with international. So some of the international markets are more interesting right now. I mean, we do have earnings. We've taken down, EPS to 205. So
for the
international
S&P.
For the S&P. So if you actually, but still, even with that, you're going to be about 20% above where we were before the pandemic. Now, if you look at the international stock markets, I mean, you're really seeing, valuations that still look a lot more attractive. And so we've had some contrarian calls, like a call on the UK, which we still keep into 2023. We like that more than continental Europe. But there's also some opportunities in emerging markets. Some of that's already played out, like we've seen China recovering, very strongly the last couple of weeks.
Mm-hmm. When you talk about it as convergence, I mean, I assume you mean that, U.S. has outperformed a lot, U.S. is more expensive, and therefore valuation convergence works to the benefit of overseas markets?
Absolutely. I think there is more international convergence that can play out here, just given the absolute levels we're at, and that U.S. earnings are going to have to come down here. You
mentioned services inflation still needs to come down, tight labor market in the U.S. Did those things imply that the Fed is going to surprise on the tighter side, or is it pretty much the market have it right in terms of where the Fed lands?
Look, I think it's another 50 basis points to 25 basis point moves, but I don't think it's just what the Fed is doing. It's the market is assuming a pivot earlier than I think will occur. And I do think it's more of a high hold that's going to be here. And then you're going to just see the weight of 500 basis points of Fed tightening, weigh in the market in 2023 as growth is coming down, as earning revisions are coming down as well. So I think that everyone thinks, when the Fed pauses, the next thing is an ease, but you could have a high hold where really they don't do anything until 2024 even.
Sure.